Here we have the current stock market update for Tesla Incorporated, stock ticker TSLA. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So what we're looking at here is the 2-hour price chart. I haven't changed any of the chart markings that we're seeing relative to the prior video. If anybody remembers, we were looking at this 213.50 area as a very strong buy zone. There were a few different reasons for that. And as we can see now, share prices are truly rocketing higher here. We are seeing a very tremendous price movement here to the top side. And we were very close here to catching the absolute bottom for this stock. So most of this activity here is being propelled by the latest earnings report. 72 cents per share adjusted. That's the EPS figure, the adjusted EPS figure. 58 cents was expected. The revenue figure was actually a little bit low, but they did beat on the right side of the equation, which was the earnings side of the equation. 25.18 billion in revenues, 25.37 billion expected. So this is a revenue increase of 8% on the year. Net income rose to 217 billion, 62 cents per share. That's relative to 1.85 billion, 53 cents a share at the same period last year. So overall, these are very strong numbers, and this does show, a very strong footing here for the stock now that we have sort of developed these lows. So for anybody that remembers the last video, we were really looking at this region here, right around 213 as a very strong buy zone. And as we can see here now, this ultimate price low came in at 212.11. So we were about $1.40 from those lows there, and that was a very strong entry point here for what should have been a very strong trade. So hopefully there were people that were able to catch this trade as it happened. We were looking at this area for a few different reasons. It was becoming an area of historical support after that robotaxi event sent share prices gapping lower. So as we can see here, there was a fairly significant price gap here to the downside. And to me, this looked like a very strong buying opportunity because it wasn't really based on much. I guess the market was expecting a bit more from this event, this robotaxi event. The market wasn't really happy about what it saw. But in my view, that really didn't justify share price declines that were this drastic and dramatic. As share prices moved lower here, what we can see is that overall, this price movement fell right into the 61.8% Fibonacci retracement of this ascending move here. So this would essentially be the move from 182 to just below 265. And if we use that price movement as the ultimate measurement here, we can see that the price really did land right at that 61.8% retracement, right around 213.50. We did see a little bit of price movement lower from there, about $1.40, a little bit less than that. But now, we were able to form a base here, and share prices did rocket higher based on this latest earnings release. So these were very strong numbers here. This is based on, fundamental information. This is not just, a robo-taxi event where it was more, the downside was based more just on expectations or, people expecting sort of a Steve Jobs type moment and they weren't happy with what they saw. Those types of price movements to the downside really aren't based on very much. It's really more of a sentiment move more than anything else. And as we can see here, the trading volumes here have seen significant spikes upward. So these do sort of envelop or engulf, we can even say, these prior trading volumes here that we're showing to the downside. It was amazing to me that we saw so much downside price action following that event. I mean, to me, that really just did seem like a overreaction that was really based on nothing. And this was why we were looking at this 213 area as a very viable entry point for shorter term positions here. And these movements higher are now being based on or fortified by these positive trading volumes here, which do overlap or engulf these prior trading volumes that we're seeing to the downside. So we are going to sort of zoom out a bit here on the price chart, but what I do think that we should take note of here is now the fact that we have two sort of price gaps here right around the same area. I mean, this was part of the rationale for the argument for long positions around 213, because in my view, we would only need to see a bit of a movement here to the top side after finding support at that 618 retracement. We would only need to see a little bit of a move here to the top side in order to start refilling that price gap. But as we can see here, with this earnings release, the stock is actually completely gapped over that prior price gap. So what we're really seeing now is two of these formations coming into contact right around the same area. So that does ultimately suggest that volatility is in store here. We could see some fairly dramatic movements, possibly in both directions. Very choppy trading is possible here because we do have price caps in two directions at the moment. So if people do start to take gains here, to take profits right around this area, and if we do send share prices back below that price gap, it does look like it could be unpredictable at the moment. So in my view, it is the prudent move here to actually take profits on this trade. From right around 213.50. I mean, this is a very significant price movement here. It's over $40 in share price action to the top side. So that is a very strong gain here for people that are looking to trade this stock from the shorter term perspective. I understand some people are looking at this from a bit of a longer term perspective, but anybody that took this trade right around 213, my recommendation here would just be to just take the gains because I do think that things could start to get volatile here and unpredictable in two directions. Now, that does not mean that share prices cannot continue moving higher. We actually haven't seen a test of this near-term resistance level, which came in just below 265. And I do suspect that we will actually get there. So if people do want to hold on to the position longer and wait for that resistance zone, for example, I don't really have a huge problem with that type of logic. But if people were looking at this from the shorter term perspective, which is how I was describing this trade in the prior videos, more of a shorter term trade. In my view, this would be a good time to just take the gains, possibly wait for a bit of a retracement if you're highly bullish on the stock, and then look for a bit more of a base, and then look for another run higher. So a lot of this does depend on time frame. If you're looking at this from more of a short-term trade, I do think that that's an acceptable level to start taking profits. But if you are a longer-term trader and you do want to wait for more of a resistance level to develop, that makes sense as well. So overall, these are very strong numbers here. This should put the stock on a very strong footing going forward. And it does now suggest that this 211 level is now the main level to the downside. And ultimately, our 213 price zone was a highly attractive entry point for shorter term positions. So here's the current stock market update for Tesla Incorporated, stock ticker TSLA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.